Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, let's continue discussion the situation on the euro currency. Start from the daily time frame as usual. Well, on the daily time frame we see that yesterday market has formed another the highway pattern that in general could be treated as the market indecision. So you can see that it's highway and here is the highway. So this could be treated as the respect of that solid area of resistance. So that is the double of pivot levels. So this is monthly pivot point and red line is the weekly pivot resistance 1. So also both of these pivots stand below the 618 resistance of the whole swing to the downside. And our major question to the daily time frame was as follows, as you remember. So here there are two different and opposite scenarios could develop. First one is this potential head and shoulders pattern, because current price action looks very harmonic. So you can see that market stands precisely at 618 at the same time, at the same level as here. In terms of time, these shoulders also very harmonic. So from that perspective, this is the bearish side, bearish pattern. But from another point of view, if we will take a look on the weekly time frame, you'll see that this could be the A, B, C bottom, D development, since weekly trend holds bullish, and this could be just the retracement of 50% support of that swing, respect of that level, and continuation to the upside. So our major task is to find some clues and control the price behavior to make the right decision about the future perspective. Well, if we will think logically about the events that we do not want to see from the bullish point of view, they will be, first, we do not want to see the shifting of the trend onto the bearish side. That will suggest some deeper move to the downside. Another one, we do not want to see taken out of that low and continuation of this according to this head and shoulders pattern. From the bearish point of view, we do not want to see the taken out of that level, because if market will proceed higher, then it will erase this potential head and shoulders pattern, and it will be the clear event that will tell us that probably market is ready to continue move to the downside. Unfortunately, on the daily time frame, currently market shows some shallow price action in the tight range, and we can't still estimate the future development based on this pattern. But we could make some actions based on the intraday charts that could let us gradually possess ourselves either on the first scenario or on the second scenario. And yesterday we just have discussed how this could be done. On the 4-hour time frame, what do we see? That is our ABCD pattern that we have discussed yesterday, and head and shoulders pattern on the hourly time frame. Our context for trading was, if you are a scalper and intraday trader, you could trade this on the short side of the market from that standpoint. The target was 131.40 area. It's right here. This is the target of that ABCD. Well, now that has happened. You can see the market has achieved our level. We said that this is significant support, because this is the target of that ABCD pattern, and the 618 support from this thrusting reaction point from that low to that high, market probably will respect it. So that is now is happening. You can see that market is respect that area. So if you have entered long in that area, probably you could easily move your stop to the break even now and watch the movie. Also take a look at these lines, that line and that line. They, in fact, the clone line of that swing. So what was here? This is the 618 retracement of that move. I have cloned this line and drag it to this level. You can see that market now shows the same depth of the retracement. So the nature of their move is also an angle of this retracement is very harmonic. Also take a look at this strong bar to the downside. After such kind of bars, it's very market has significant momentum to the downside, it's very difficult to reverse right at that area. So that makes me think that probably market will show some deeper retracement, because yesterday in this point I can predict that market will act as this thrusting move to the downside. If it will be a gradual move, then probably we could suggest that the starting point of this upper move is possible here. But currently, after that strong bar to the downside, it's better to move your stop to the break-even or even protect your position if you stand long currently. If you do not enter long, then probably it's better to wait for some another pullback to the downside. Here's the foundation of this assumption. Also take a look at the 4-hour time frame holds bearish. On the hourly time frame, you could see this area of resistance, 618 resistance, as we said, from that swing, as well as that was the 618 resistance of that swing. So you can see that market now stands at the confidence resistance area 131.94, 132.10. That is a significant area. Also take a look at the nature of this move. This is more as a retracement. The angle is the same as here, so it's very harmonic retracements at the same depth after the swing. It's very obvious that this is the thrusting move to the downside. Take a look at this price action. A, B, C top. This is our ABCD pattern. Market has accelerated right from the 618 extension to the 100% extension target, right to our area of agreement. Usually when market is showing such kind of thrusting move to the downside, it has significant chances to proceed lower. Usually the target of this potential continuation is the 1618 extension that stands right here. It's around 138 area. Also, that area is absolutely logical from the perspective of the head and shoulders pattern. If you know, the target of the head and shoulders pattern, classical target, is the distance between the neckline and the head counted to the downside. This is almost always equal the 1618 extension of that ABCD pattern. So that's why I suggest that during today's trading session market could proceed still lower, maybe to the 127 extension, also in agreement with the major 618 support. But this really could happen. Depending on how market will behave in that area, will depend the future price action on the daily time frame. So if market will not find support in that level and proceed low, then probably this will tell us that daily head and shoulders pattern will prevail, and we should be ready for the deeper move on the daily time frame. If market will find support here and will start some thrusting move to the upside, then we could say that probably this will be in favor of weekly bullish ABCD pattern. So, but this is a bit far perspective, and it's beyond the scope of current research. So today's our focus on this retracement and the potential continuation to the downside. And I suppose that it should happen. The minimum target of this continuation, I suppose, will be at least to the 131.10, 131.15 areas right here, but more probable that even proceed to the 1618 extension target.